What is going on, investors? In this video, I want to share with you two stocks that I've been buying this week. But before we dive into that, I want to share this picture with you. This picture is so simple, but yet so powerful at the same time. And it really does depict the saying, that time in the market beats timing the market, right? So have you ever been in that position where you've bought a stock, or maybe you're looking to buy a stock, and as you can see, it's gone up and you think, oh, I'm late, I've missed the boat. When in reality, we've just let go of huge upside in the long term. I mean, I'll be the first to admit I felt this exact same way with a company called Upstart. Ticker symbol is UPST. They've been on my watch list since the beginning of August, and when they beat earnings, they just spiked up. And I figured, okay, I'm gonna wait for it. Maybe I'm a bit late. I've missed the boat on this one, but it might come down, so I'm gonna keep it on my watch list, only for it to continue higher. So it was on my watch list from about $150-ish, and as you can see now, it's at $327. So I completely missed out on almost doubling my money with Upstart because I thought I was late. And I think a lot of investors fall into that trap, myself included. And I almost fell into the same trap with OPENDOOR. Ticker symbol is OPEN. So OPENDOOR is a position that we've been buying recently, but as you can see, it's been on an absolute tear since it bounced off this support level. And this was when the company announced a secondary offering. So SoftBank was selling up to 42 million of their shares, and Citi absorbed all of those shares. But look at it. Ever since that moment, it's been 1, 2, 3, 4, 5, 6, 7, 8, 9 green days in a row. And even myself, I've got a very good cost basis for OPENDOOR. Let me show you my position, right? So this is my OPENDOOR position. I have 1767. That's my average right now. Last time I showed you this position, I had close to 1,000 shares at $17.50. So I found myself averaging up in OPENDOOR, and I'm now sitting on 1,100 shares of OPENDOOR at 1767. But it just continues to rally. With the Evergrande or Evergrande crisis, whichever way you want to pronounce it, I was getting excited. I'll be honest, I was getting really excited, and I thought, yes, we're going to expect some fireworks this week. I recorded videos saying, this could be bad, but this is the opportunity that we've been waiting for. That was why I titled my video, because I saw the Evergrande crisis as an opportunity to load up on high conviction plays, but it never played out. SPY dropped only 1.37%. And if you look at it, it actually finished up 2.13%. So all of the headlines calling the Evergrande crisis, the next Lehman's or the Chinese Lehman Brother event, this Evergrande collapse could crash the markets globally. We were expecting fireworks, or at least myself and my Discord were expecting fireworks, but absolutely not. The dip that we saw, could we even call it a dip? I mean, 1.37% on the SPY. I mean, it's hardly anything really. It got absolutely eaten up by investors, and we finished the week up 2.13%. So there goes your opportunity. So in the end, I decided to average up on OPENDOOR, and I'm now sitting on 1,100 shares. Now, why did I average up on OPENDOOR? So Citi recently assumed their buy rating for OPENDOOR, but not only that, they also increased their price target to $40. So from where OPENDOOR closed on Friday at $20, that $40 price target represents a 100% upside if they are correct, okay? You've got the analyst comments here. He said, we are resuming coverage of Open with a buy rating and a $40 target price after a brief period of restriction. We continue to see a large opportunity for Open that is in its early days. Open's ability to execute in a real estate market where ostensibly home sellers have never had it easier gives us confidence that its model is robust. We are also updating our model to reflect Q2 or 2Q results and updated outlook. Our top and bottom line estimates move higher on better guidance than we originally estimated. Accordingly, our target price increases to $40, and that's up from $34 on our higher estimate. So that's a 100% upside from where we are today if Citi analyst Nicholas Jones is correct. So again, if this analyst is correct, it just kind of puts emphasis on this picture again, thinking, oh, we're late on OPENDOOR. But if they are right, that's 100% upside for OPENDOOR. So even though it might appear that we are late, I don't think so. I still think it's really early days for OPENDOOR, and I think I will continue to buy at these prices. And if we do see any weakness in the stock, then I'll continue to load the boat. And my target is to get my open door position to about 2,000 shares. So in addition to Citi assuming their buy rating and increasing their price target to $40, our largest shareholder just made their position even larger. Okay, so Open Door Technology receives additional $300 million stock purchase from Access. So Access Technology Ventures, the venture capital and the growth technology investment arm of privately held institutional group Access Industries, announced an additional $300 million purchase of stock of Open Door Technologies. So Access's $1 billion position makes it Open Door's largest shareholder. So Access are clearly bullish on Open Door. They see a ton of upside ahead of it, just like I do. And they decided to take the opportunity to strengthen their position. And they are our largest shareholder. So this is very good to see as an Open Door shareholder. So as well as Open Door, the other stock that I was buying recently this week was HIMS. Ticker symbol is HIMS. And as you can see, there was a lot of weakness in HIMS this week. We saw volume absolutely collapse this week, and but the support held up. So the $7.93, which is the 50% on the Fibonacci retracement level, that held up quite well. So we tested it on the 20th of September. We also tested it again. You can argue we tested it on the 23rd, and again on Friday on the close. You know, we're trading around that support level. So this support level at $7.93 seems to be holding up. So I decided to help myself, and I picked up an additional 100 shares of HIMS, bringing my position to 2,900 shares. Now, preceding this, we also had some good news from HIMS. They've expanded their customizable compounded skincare offering with HIMS Overnight Anti-Aging Duo and also Hers Clear Skin System. So this is essentially the company doubling down on their dermatology offering, the products that we offer. And it's been one of our top performing categories over Q1 and Q2. But it's no surprise for me to see the company doubling down on this category. And I've been told I'm pronouncing category wrong. People are calling it category. Wait, category? Look, I've been pronouncing it category my whole life. So it's a bit difficult trying to change that. But you guys know what I mean, right? So Open Door and HIMS are the two stocks that I've been buying this week. I plan to buy more Open Door if we do see any weakness. If we don't see any weakness in the stock, then regardless, I'm going to have to average up anyways. But it would be great to see some red. Okay, we've had too much green. 9 green days in a row is taking a mick. But of course, like I said, we're in this for the long term anyways. And as this simple picture depicts, you know, time in the market beats trying to time the market. So thank you so much for watching. I hope you gain a lot of value from this video. If you do want to join my Discord group, the Patreon link is in the description below. Thank you so much for watching, and I'll catch you in the next one. Peace.